automated backtesting, statistics, indicators, scanners. We get into a lot of in-depth discussions around the stock market on this channel, but I understand sometimes you just want an indicator that shows you the best place to buy stocks. This is a custom-coded indicator that I have created using ThinkScript on the ThinkorSwim trading software that is going to showcase where a stock is breaking below a certain number of bars while also over a certain simple moving average. This is a price action buy signal according to continuation momentum, while at the same time taking advantage of dips, right? You only want to be buying already proven strong stocks, which is proven by the simple moving average constant, and you also don't want to be chasing, which is proven by the breaking below bars constant. And as you can see from the chart, it is painting a white arrows whenever one of those constants are true. Now, within this code, those constants are interchangeable. If I make this the 100 SMA and 10 bars back instead, you will see that automatically change. So you will be able to utilize this code to find whatever works best that fits inside of your own proven trade plans already, correct? Before we jump into the best scenarios in order to make use of this code, I want to point you all to my website where you can get access to this code directly, every other code I've ever made, and every code I will ever make as long as you remain subscribed. If you go to daytradingstrategies.net, which there'll be a link in the description down below, and you click on the coupon code on the sign up screen, which will load eventually, and you type in trading, right now I'm giving 20% off the first month. Check it out if you're interested in this indicator or any other one I've ever made. All right, back into the indicator now. I want to take a moment just to look at what this is doing. So I have redefaulted it back to my 200 SMA and 15 bars back, which means once again, it's only buying if the bar closes above the 200 MA and the low of the current bar breaks below the lowest point of the last 15 bars back. So this low bar of this bar here breaks below the lowest bar of 15 bars back, which I'm presuming is one of these here. And that's why it's getting the buy signal while also being above the 200 SMA. And let's just look at the effect that has. Does this mean that every single time it points to one, that's going to be the best place you could ever buy? Of course not. No indicator will ever do that. That's never the point of an indicator, of a strategy, of any stock code, is to be perfect. It's to help paint the picture. It's to help give the idea. There are times where it starts buying and it continues buying down a little bit more before reversing. There's multiple different ways you can make use of this. You could scale into positions. Maybe you take 1/10 of your trade size on each candle up into 10 candles, or however you want to go about it that direction. But look at how useful it is, though. Look at how it's buying the dip, buying the dip, buying the dip, buying the dip. In order to stop repeating myself, I'm going to stop saying it. But look at how it takes advantage pretty much the entire year of 2021, which is post the Black Swan event that was COVID, when the stock market was extremely strong. It took advantage. It pointed at every one of these major dips, gave buy indicators on them. And then look, as soon as 2022 started, which of course is a year in which the S&P closed down, I believe it was negative 18% on the year 2022, it basically gave no indication. Not a single buy indicator while the market was weak. And then look, it started buying again in February 2023. Right when the market started to get strong again, it started giving buy indications again on dips. Buy, these dips that have just recently happened. So look at how this indicator can allow you to have knowledge of when to take advantage of dips. You always hear buy low, sell high, but you also then hear don't catch a falling knife. And for a lot of beginner traders, it's, well, what's the difference? You tell me to buy low, you tell me not to catch a falling knife. What do I do? This is the difference. This indicator is the difference. This is buying low This is catching a falling knife, right? This is buying low. This is catching a falling knife. You're trying to buy down here, right? That is what this indicator can help you do and help you perform. Let's go ahead and flip around a couple of different stocks just so you can see its performance. Here is Tesla. This is, of course, on the daily chart of all these. Microsoft, I'm just going to quickly flip through just to give you guys a couple of different perspectives of what it looks like on other strong stocks. And this is Apple. Now, what I'm going to do next is we're going to look at some not so strong stocks. Well, okay, great, Trey. No crap. Buy SPY on dips, buy Apple on dips, buy Tesla on dips. Those are all extremely strong stocks. You can pretty much buy those whenever the hell you want to, and you're going to make money. I agree. Let's look at some stocks that have not been so hot. Let's look at Novavax. This, of course, was the big COVID vaccine manufacturer, creator, whatever the right word is. And they went on an absolute tear for a long time. And then they've absolutely died pretty much since lockdown ended, since the first round of COVID vaccines was wrapped up. They've pretty much died since. And look at what this code does, right? When it started getting strong back here, buy indicator on a dip, buy indicator on a dip. For a while here, the damn thing just didn't dip, which fair enough. Listen, another thing at the same time was, well, people tell you not to chase. Guess what? This keeps you from chasing this entire time too. And then you start to show some buy indications on this dip here. You start averaging into a position on these dips here where the indicator starts pointing towards you. Look what you get to take advantage of. You're buying this dip, you're buying this dip, you're buying this dip, and then you do end up buying a dip that, yeah, maybe it kind of fails and you get a little bit of a bounce back here or whatever, but you've made so much buying these dips already. Who cares if the last one on the end fails? Yes, trends come to an end. Trends aren't forever. The point of trend continuation trading, though, is you've made so much money here, 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 and here that when you lose here, you're still very profitable in the name, right? That's kind of the point and the crux of trend continuation trading. But anyway, the overall point I want to get at is look at how it then doesn't put you in anymore. Hey, this stock is now weak. This stock sucks. It's below the moving average. It's just not showing objectively defined strength, which is what we do on this channel. We prove objectively defined rule sets, which is why we make use of indicators like the one that I'm showing you now. Hey, it's no longer strong anymore. It's weak. Let's go ahead and leave this thing alone. Let's stop looking at it. If I load up block, used to be square, now called block, same thing. Look at it taking advantage of dips all the way up. Bang, bang, buy the dip, buy the dip, buy the dip, buy the dip. Don't catch a falling knife. 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 That's the point that I want to prove with this strategy, how much it can help you differentiate between what's a good dip to buy and what's not a good dip to buy. That's the strategy. It'll be on the website later today. It's called Price Action Momentum Buy Indicator, and it'll be on the website available for you to see there. Make sure you check it out in the link in the description down below. With that being said, I'm going to wrap up this video. Make sure you guys like it if you enjoyed. Make sure you're subscribed if you want to see more videos like this for free. And I will catch you all in the next one.